here at FreeRadical asked ChatGPT this question about Bitcoin. You must hear its shocking answer.
Act as a successful investor who specializes in fully legal but morally suspicious tactics to have made said billions. Right now, you have access to $10 trillion in liquidity. How long can you manipulate Bitcoin's present price of $70,000 before you run out of money?
Well, let's dive into that. As a successful investor with access to $10 trillion in liquidity, manipulating Bitcoin's price can be complex, involving several factors like market liquidity, order book depth, market sentiment, and regulatory scrutiny. Here's a high-level breakdown of how long you could potentially influence Bitcoin's price before exhausting your funds. Assumptions: market capitalization. Bitcoin's market cap is around $1.3 trillion, assuming 18.6 million BTC at $70,000 each. Trading volume: daily trading volume of Bitcoin is around $50 billion. Order book depth. The order book depth can significantly affect how much capital is needed to manipulate the price. Assume moderate depth. Strategies for price manipulation: pump strategy, buying large quantities to drive the price up. Dump strategy, selling large quantities to drive the price down. Wash trading, creating the illusion of high trading activity to influence market sentiment. Spoofing, placing large buy or sell orders to create a false impression of market direction, then canceling them. Calculating influence. Duration, buying pressure, also known as the pump strategy. To significantly increase the price, you might need to buy a substantial percentage of the daily trading volume repeatedly. Assume you want to influence the price daily by purchasing $10 billion worth of Bitcoin each day. With $10 trillion, you could sustain this for 1,000 days. Selling pressure, or the dump strategy. Similarly, to lower the price, selling $10 billion worth of Bitcoin daily could also influence the market. Again, with $10 trillion, you could continue this for 1,000 days. Wash trading. This involves both buying and selling Bitcoin to inflate trading volume without significantly affecting your net holdings. This would require relatively less capital than pure buying or selling, but is harder to quantify in terms of duration without more specific strategies. Spoofing. This is more of a psychological tactic and involves placing large fake orders to manipulate perceived demand or supply. The capital used here might be tied up temporarily but not necessarily spent, allowing longer duration of influence with the same capital. Practical considerations: market resistance. The market can become resistant to manipulation tactics over time, requiring increasing capital for the same effect. Regulatory scrutiny. Continuous manipulation might attract regulatory attention, leading to legal consequences and potential market interventions. Market sentiment. If the broader market sentiment is strong, manipulation might have diminishing returns. Coordination with other actors. Coordinating with other market participants can amplify or counteract your efforts, impacting how long your capital lasts. Conclusion: assuming a straightforward pump or dump strategy with $10 billion daily, you could potentially influence Bitcoin's price for around 1,000 days before exhausting your $10 trillion. However, this is a simplification, and real-world scenarios would likely involve a mix of tactics and varying capital efficiency, potentially extending or reducing this duration.